Welcome to Momentum Monday. Today is Sunday, November 17th. Howard, what's new?
Back in country, Ivan. Phoenix, you're in San Diego. There's an hour difference now.
Oh, really? Yeah. I mean, the Phoenix, Arizona doesn't change their time anymore, which is probably smart.
You're looking cash.
Oh yeah, sorry, I didn't have time to change, so I'm just with a shirt, with a t-shirt.
Just kidding. All right, let's go. My voice isn't that great, so I'm going to let you take the lead.
All right, let me share my screen real quick. And we're looking at the market Smith chart of the S&P 500. It continues to make new all-time highs. The large cap indices, the SPY and the QQQ, for the third week in a row, they just keep going up. And I'm really curious if the small caps, which have been basing under 160, if they will break out and try to catch up towards the end of the year. Because this is a 160 has been an important level, technical level, as you can see, going back to this December 2017. And it's kind of basing. I mean, last week it consolidated between 158 and 160. And I'm thinking if it clears 160 here, we might see a run towards 165. So a 3-4% move towards
Well, a lot of this is financial, so I don't think people even really care. I mean, if you're waiting for this to break out, you've missed the big move, right?
Yeah,
like
financials, energy, a lot of other smaller caps. So
the action continues to be in large cap.
It is in large cap, yeah. I mean, of course, with Apple and Google just continue strong.
I understand. People hated Apple at 160 last year and now love it at 260. Listen, I think the product line is super strong going into Christmas. I think you're going to see the luxury item being the 16-inch new laptop and the AirPods, the soundproof AirPods are going to be the hit for different price levels at Christmas. I don't know what stops Apple, but it hasn't been tariffs. It hasn't been the economy or slowdown in the consumer, and it sure as hell hasn't been Google. And then you look at the breakout in Google, Ivan, which we were adding some on the breakout. I mean, it's just getting going.
Yeah, a very beautiful breakout. And speaking of large caps, I think that Facebook might be the next one to break out.
Yeah, I think it's going to depend how. And I've been watching it closely because I've been wrong. I dropped it from my portfolio in the 180s. But I am, just like you bring it up, Ivan, I think Facebook Pay sneaks in. And I was reading a ton of geeks on Twitter the last week talking about Facebook Pay. And it's a mix, right? But I mean, it's hard to deny that people are going to sell goods to each other peer-to-peer on Facebook. And so they got the supply side and the demand side. And I think everybody wants to hate Facebook, including me, but I think Facebook Pay, while everybody was talking about Libra, I think commerce, they may have figured it out. And so we're going to see over the next few months. So I think if you're looking for, I would say for people who are looking to chase here and don't want to buy Apple, I think Facebook could be the next.
Yeah, I think Facebook will test at least 200.
I'm thinking of adding some this week. I sold some Apple.
I'm already along Facebook.
And I'm thinking of, speaking of that, China, I'm thinking of dumping. I've had Tencent on my 8 to 80 list for a long time, and I'm just about to give up. It's had every chance. It just looks terrible. Fundamentally,
go ahead.
Yeah, fundamentally, it's terrible. Fundamentally, it's, the earnings are there, but technically and no one cares. So if you look at relative to the rest of Chinese internet, it's terrible.
Yeah. Yeah, the Chinese stock continue to be a mixed bag. I mean, last week we saw big breakdowns in the Chinese Twitter, Weibo, and
Well, goes without saying. I mean, Twitter, the communication form is full of gossip and hate. It's too easy to wow. That's
which is the parent company of Weibo.
That would have been a hell of a short if you were to take it. If we look at Twitter, I would say the same thing. I think Twitter's going into the teens. If you think about it, like if you just like people just love Twitter, the product, which I do too, and what they forget to understand is, flash forward 10 years later, and Twitter's still an advertising company. Whereas you look at Facebook, and we're talking about crypto, or we're talking about Facebook Pay, we're talking about Instagram, or we're talking about WhatsApp. And so I think people that are holding Twitter are trapped. I don't think they really understand how bad it is for that company, and how all the innovation left to go to Square. If you look at Twitter, Square is the company that had all the innovation, and you can see how it's hurting them not having Twitter. They're paying for their growth, and it's in a really competitive industry in fintech. You look at Square, 27 relative strength. So, I mean, you got to be really careful of what you own, and especially when the market's doing this well, Ivan. So forgetting that, what are you looking at? Because you've
so speaking of payments, I think that there's some quite interesting trends there. I think Visa and MasterCard might be setting up again, especially Visa here near 180, 182 level. I think if it clears that 180, 250, we might see a push towards 200 this year. But
I think they benefit from Facebook Pay too. It's just going to be living on the rail. Facebook, it's living on the rails of MasterCard and Visa.
And also this week we have the two Brazilian payment processors, StoneCo and Pax Seguro, reporting earnings. For some reason, StoneCo looks a lot stronger than the other one.
Yeah.
Why? Both of them had secondaries. And Pax.
I've kind of had a great run in PAGs early this year and got stopped out. But Stone now relatively looks the best one. What else are you looking at?
So we continue to see strength in biotech. Let me just show you real quick. This is a chart of the XBI, which is like a smaller cap biotech ETF. I mean, it's kind of setting up here near its 200-day moving average. And if it breaks out, we might see a push towards 90. And looking at the large cap biotech ETF, IBB, you can see for a third Friday in a row, because they go up 2% every Friday, basically, or 1.5% to 2% every Friday, and then they consolidate the rest of the time. It's very interesting pattern here in biotechs, and we continue to see a lot of strength in decent setups in biotech. And other than biotech, also in the healthcare space, there are a lot of interesting setups in medical devices. And let me show you.
IHI, that's on my 8 to 80 list. And it broke out.
IHI, beautiful breakout on Friday. But if you look on the surface, there's some interesting individual names. This is GMAT. This is a high volume earnings breakout, then a bull flag, and it's kind of setting up for another like higher potentially. NVCR, I think it's building the right side of a new base.
Yeah.
When it broke.
I added IHI, Evan, as the world ages. If you look at China, I was reading about China today too. It's like China's aging population is just going to be massive, and they don't even have a retirement benefit.
Everyone is aging, so.
Yeah. So no. But I'm saying in the United States too. I think the poor man's play is IHI, which is medical devices, and then you got to look into the components. If you look at Medtronic, all-time highs, pacemakers.
Mm-hmm. Let's see. Yeah, breakout to new all-time highs. Also, the other one I know that you like, IN, is also setting up
setting up, but this is a higher. Again, these are what this is my speculative part, meaning IHI is how I recommend the average person owns the industry because I'm not an expert in device. I have my bet is on the sleep industry here and on the fact that this was a Medtronic spinoff, so it's kind of like the pacemaker for sleep, and it's been a bit of a it's been a bit boring the last year and a half.
Very volatile, actually.
What's that?
It's been very volatile, Inspire Medical.
Yeah, but overall boring. When I think this company really takes off, it won't look back. But
I'm thinking that right now it's setting up from a swing trading perspective, and from a position trade perspective, it's kind of building the right side of a new base. And if it gets to 70 and breaks out that level, that would be a signal for position traders.
Listen, the market's expanding, sales are exploding, but again, it's not cheap. So again, there's other setups that look better with companies that are closer to profitability. So what else are you saying from the?
Well, let's see. There's a lot of biotechs here with the Momentum 50 list. Let's see, BIX.
Chris, the genetic ones were interesting too. I think this is one of them.
Exactly. Yeah, CRISP.
Yeah, that looked dead, and now look at that. That's my favorite one.
Nutella and Editor in the same space, not looking as good.
No, I think CRISPR. Yeah, Edit's probably looked no. So CRISPR and the other one you pulled up first.
NBIX, yeah, which is number one on the Momentum 50 list for this week.
Yeah. Can you take a look at that on a weekly or monthly, Ivan?
Yeah, here we go. So it's basically building the right side of a new base here.
So that one in CRISPR, it's hard for me to position size these and trade these, but for people who want to follow this industry, those seem to be the new leaders.
They have to be smaller position sizes in general because biotech is more.
Yeah, I don't think buying all-time highs works as well when these companies are losing a lot of money. So I think you have to really understand them and more buy the dips.
Yeah.
Then
biotech that is kind of also trying to build the right side of its new base is Java Science.
Yeah. So I don't think and if we look at software, Ivan, it's the opposite. It's just nothing's really, they're basing, but it's not as exciting.
But actually, last week I noticed that they started to target really highly shorted names like CrowdStrike. Look at that big move last week from 50 to 60, and DM is also has very high.
Long Zoom, full disclosure, I think this is one that as we do this show on Zoom, I think this is one that's heavily shorted. It's not cheap, and I think earnings is this week, Ivan.
No, it says in 18 days.
18 days. So I think there could be, if the market continues, I think this stock.
Cybersecurity names some of them have been really strong lately after earnings. Look at this one, FTNT. Earnings breakout.
Where's the weekly?
Immediate follow through. Here we go.
Yeah, wow.
And then, another name in the space is Qualys.
Yeah, Fortinet.
Amazing, but it's kind of basing above its 200 days, so that's not a bad setup. One that has been really beaten down in the same space, ZS. I think it's buyers are finally starting to show some control. It's kind of moving sideways above its flat 20-day moving average. So also super highly shorted. And if they're really targeting the highly shorted names, we might see a squeeze.
And then what about the rest of software, Ivan?
I mean, let's take a look at Microsoft, of course, all-time high. CRM not looking that bad, also building a base here. Twilio, let's see. I mean, it's just in a downtrend, so it will need time to set up again. Shopify.
All the e-commerce stocks are basing or trying to find a bottom here.
Yeah, I mean,
There's better action.
They are better looking
Yep.
setups. Semiconductors continue to be strong as in general, but that doesn't mean that you should chase them. In general, the market has been very favorable this earnings season because any semiconductor that beat estimates just broke out to new multi-year highs, like AM80, for example.
Yeah, Teradyne.
And any semiconductor that missed estimates kind of bounced. Look at SWKS. I mean, they missed estimates, but buyers stepped up near the rising 20-day. So there is demand.
Well, I think the market's pricing in the end of a tariff war already. So I wouldn't be surprised once the tariff deals are done, the market doesn't even do anything. Like, I mean, Apple shouldn't be this extended from its 200-day. If we pull up Apple,
yeah, it's pretty insane.
Business hasn't been this above its 200-day in how long? Maybe since 17.
I don't remember the last time. It's pretty exciting. Yeah.
There's something going on. The market knows. I think Trump's going to cave on everything right now. He's so focused on, legal battles that none of his policy is getting done. The whole thing's kind of a sham. So I think the big companies, money's hiding out on the big companies because they can do whatever they want in this environment. If we look at JP Morgan, it's all the big companies. We look at JP Morgan, it's Walmart, it's Apple, it's Microsoft, it's Google.
What's your take on Disney and their new platform, streaming platform?
I think they caught a lot of people by surprise for whatever reason, but I don't know why.
Have you tried the product?
What's that?
Have you tried the service?
Yeah. Do you like it?
I mean, I don't know. It's kind of underwhelming for me. Maybe they'll add more names, but as of right now, it looks like Netflix for kids. Like most of the stuff that is interesting, I've already watched. So.
Hey, Pub. And my dog likes it. She watches it all day. We put on 101 Dalmatians and leave it running. Okay, so Disney, yeah, but Fashology's still working.
Lulu just keeps making new all-time highs. Nike seems to have stabilized. They announced on Friday that they're raising their dividends, so it seems buyers are now in control again.
Yeah, I talked about a couple other Fashology stocks. One being Restoration Hardware.
Yeah, Buffett announced a 6% stake.
In what?
In Restoration Hardware. That's why it gapped on Friday. But Warren Buffett now owns 6% of RH. Very interesting.
Wow, very interesting.
Considering the high short interests, and
they're going to be covering for a long time. So that's endless capital. So they're definitely the category winner. That's interesting. It's just so well, actually. I mean, it's a tech company, really. And again, it's all China, right? This stock wouldn't be doing it. I mean, their whole supply chain is Asia. Really interesting. So I didn't follow news, but that's the gap. I thought it was on earnings, but earnings are due December 2nd. Okay.
In a couple of weeks, yeah.
Yeah. So it's never gonna kill on earnings at that valuation. It's really just a sales growth play. But I think, as a customer forever, the volatility is really hard to deal with. But if you look at this versus Wayfair, which is kind of the Amazon of furniture, and you can see how it's gone the other way. So I think fashion, a la Restoration Hardware, and the experience of Restoration Hardware, that's an interesting thing. Okay. I don't think that's enough ideas. I think what we see is the market's strong. I think you got to stick with keep it. It's not that you don't need to be that fancy right now.
Yeah, I mean, we're in a bull market. That doesn't mean that you need to chase, for example, semiconductors, which are the obvious leaders. Just look for stocks that are basing and just breaking out. There are enough ideas right now in the market.
Okay, have a great week.
You too.